The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off. About 24 minutes to go until the start of trading. You have markets up 15 points in the S&Ps. We got a CPI number this morning, 2.9%. Consumer prices rising in August. That's going up from 2.7% the month prior. Right in line with expectations, though. We got problems on jobs, and consumer prices got a little bit of a problem. Now, housing is a big component in CPI. Okay, we're going to talk about that later in the program. Owner's equivalent rent, housing, a huge component, shelter of the CPI. Not quite representative sometimes of actual prices, as in consumer prices, home owner's equivalent rent, it's a theoretical number that's not actually hitting. That's a big component right now of CPI, but nonetheless, 2.9%. The market says it was in line. There's no surprises, and you get a higher price, lower yield spike. The 10-year actually spiking to 4%, and then we've paired that a bit. Now, right now, we have a yield of 4.03 on the 10-year. Okay, and we got jobless claims at a higher level than we've seen usually as well this morning. We take a look at the markets. S&P's up by 14 points. And yeah, you're looking at an all-time high open right now, up 65.54. NASDAQ 100. We talked about it yesterday. You had some rotation going on yesterday. We'll see how today plays out. Up by 69 points, 23,947. The Dow up by 0.25%, 102 points in the green, 45,642 in the Russell. Check out that volatility on the Russell. Positive by 5 points. Bitcoin up $210, 114,185. Crude down $1. We were at $64 yesterday. We're at $62.67, down $1 for crude. As I mentioned, on the 10-year right now, up by, well, I guess flat. We're positive from where we came into that CPI number, but the 10-year right now at about 4.03%. And yeah, we were all the way at about 98 prior to that CPI number. We got jobless claims we'll get into as well, but 97.59. So you got yields lower, dollar weakness. Gold in the red, right? Oof. Well, gold's had a heck of a run. Digesting some of those gains, gold trades from 3,300 and change up to 37.15. We're at 36.73 right now. Gold negative by $8 on the session. You jump over to silver right now, just off of the not all-time, recent highs, we'll call it, 42.35. Silver up by 9 pennies at 41.68. And let's jump around to some of the equities. You got Amazon shares right now. Quite a day to the downside yesterday. You're going to be up by about $2 right now in the pre-market to $232. Microsoft yesterday, quite a trade. You're going to be up $2 as well, 502.52. Oracle, you talk about it yesterday. Up $4 right now in the pre-market to $332. NVIDIA was a big gainer yesterday as well. You're going to be up to $178.92 right now. Google trading at $239. We jump over to Meta shares, $754. That was quite a trade lower. AVGO Broadcom, one of the big winners yesterday. Quite an acceleration. Down $3 this morning. Okay, we get into the CPI numbers. And basically in line. But you look at these numbers, and you add on to it to a Fed cutting, you got to at least recognize the risk. And there's risk everywhere. You better believe there's risks on the jobs front. But this is what's going to make almost threading this needle so difficult here, right? It's a 2.9% print. The R-star, the rate of natural growth in this economy, and the rate that the Fed is going to be okay with inflation is probably a number settling above 2% right now. That can change, but we're at 2.9%, and the market is rejoicing that we're going to get some cuts coming down the line, and there are many cuts priced in, and the only conversation is if we're going 50 basis points in 6 days, not if we're going 25. Shelter inflation, as I talked about, picked up 0.4%, the most since the start of the year. Advances in rents, largest jump in hotel stays since November on the shelter front. And yeah, the PCE, which the Fed considers slightly ahead of the CPI, does not include as much housing. And this is the weighting I wanted to get over here. Okay, and on CPI day versus PCE day, CPI is what we just got this morning at 8:30 for inflation. Housing, 32% of the CPI in yellow here. The PCE, it's only 15%. Okay, you know what's a much bigger component? Healthcare. Yeah, 9% of CPI, 21% of the PCE, which the Fed prefers. Financial, CPI, it's only 3%. PCE, 8%. Okay, and then you go down the line a bit. Energy, actually a bigger component of CPI versus the PCE. Now, a big component of this, and the way to keep these straight in your own head, the way I keep it straight in my head is consumer prices are what you're actually paying for, the consumer. Versus there's a lot of goods that you use, okay, that you are paying for inherently that you're not paying for directly and you might be paying for a third party. The greatest example of that is healthcare, right, which is a much bigger component of PCE than it is CPI. And why is that? Because many individuals are not paying for their own healthcare. It's not a consumer price. It's a price that their business is paying, but it's a price that, guess what? It's a consumption, right? The personal consumption. They're consuming it. You might not be paying for it, but you're consuming it. And that's the difference. So when you're consuming it, healthcare is the greatest example, and housing is the greatest example on consumer prices. But that housing is a big component of that, so the number not as lofty as 2.9%, but nonetheless, 2.9% is the number, and month over month, you come in at 0.4%. Yeah. Core CPI, 0.3%, everything basically in line, right? And that's really all that mattered. No disruption to 6 days from right now with the Federal Reserve. Seems all things considered, and the market would agree, as in higher price, lower yield, the 10-year approaching 4% right now. And that seems to be the path. And we got dollar weakness right now and gold chopping around near the highs. Now, when you talk about what the market's pricing in for that meeting coming up in 6 days, 91% chance that they cut by 25 basis points and about a 9% chance that they're going to cut by 50 basis points. Okay? The more interesting conversation when you go out to December, 3 cuts. Cut is almost at 80%. How about that? Okay? Almost 80% that we're going to be, by December, 3 months from right now, 75 basis points lower. The market's gotten ahead of itself sometimes. We're going to get a lot of data in between now and December 10th. And then let's go out to April. And you can see that it doesn't come down far from there, though. One more cut by April, priced in, right? So the market thinks by December, no, forgive me, we're going to be at 3.5. Yeah, and by April, we'll probably get 1 to maybe 2 more cuts there. Nonetheless, 3, 4, 5 cuts priced in over the next 6 meetings. Stay tuned, folks. We're coming back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps up by 15. Markets green across the board right now. You jump over to Apple shares. Apple up about $1.50 in the pre-market. They have their event on Tuesday. You come into that event about 236. It was negative action yesterday, negative action on Tuesday as well on their event. And yeah, they get the new iPhone coming. They get the new Air coming. And we got plenty of articles out here talking Apple, of course. Now, this one's out yesterday afternoon. And you know, as somebody that's in the market for a new iPhone, and I'm coming up on 5 years, so I'm due, the batteries become a little bit of a problem throughout the day, which is remarkable. It's only been 5 years. Realistically, takes amazing pictures, folks. You know, it's an outstanding phone. It's 5 years old, and the only thing is the battery is a little bit touch and go. But they have the new Air for their iPhone, and it's going to be interesting to see how many people are willing to sacrifice the for better lack of a better term, just the efficiency, the battery life, the capabilities of your phone, just for mere appearances and for size. In the days of, you know, and that's, I found myself saying, I don't think this is going to get it done because battery life is so important. And that's always going to be the problem, right? They say it's an all-day battery, but they also sell complementary batteries to go with it in case your battery runs out. Now, you look at the numbers in terms of Apple. Okay, this one out yesterday morning. $207 billion is what the iPhone generated in sales for a 12-month period ending in June. That would rank it as the 15th largest company in the S&P 500 standalone business. But guess what? That's not all they're doing. But iPhone revenue, less than 2% annual growth over the past 3 fiscal years. Yeah, service is a big component, of course. There's a lot of people in the den. I always appreciate the great feedback that go many years. And it's just amazing the cycles they've had, even as people have been able to hold on to those phones a little bit longer. You're talking about $200 billion a year, consistent numbers, and really you haven't had a bang out reason to upgrade, right? My reason to upgrade was I was having a son coming into 2021. So I bought a phone like about this time 5 years ago. It wasn't because of some advance I needed one. It was just time to go. The battery is usually the deal. Now, the other side coming out of this is that there are going to be physical devices. Now, the services aspect, how everything is so intertwined in Apple, people hate change, folks, right? They hate change. But there are physical devices that are going to be coming that are going to be AI-based. And that's going to be whether it's ChatGPT, whether it's Google Gemini. You're going to have physical devices, which we have not seen yet. But the battle to be thin, that's going to be a big advancement when you don't have to sacrifice as much as you're going to have to sacrifice. Now, how about this one, right? Yeah. Risky debt markets, subprime. Yeah. BK, JP Morgan, BlackRock, they're all in there. Tricor Holdings filed for bankruptcy, said it plans to liquidate. Just hours after reports emerged late Tuesday of an alleged fraud scheme. Prosecutors now looking at allegations of fraud, according to People. And as they put it, as a growing number of low-income borrowers have struggled to make their car payments, the bonds backed by their loans, asset-backed securities, have begun to show cracks. Yeah, pretty remarkable. And then you had many of these loans were for undocumented workers. Well, they're gone and they're not paying if they're gone. Yeah, look at the bonds. Things go so quick when they go south, right? From almost 100 to 32 cents on the dollar, some of them 12 to 16 cents on the dollar. So they focus much of their business low-income Hispanic community in states Texas, California, Nevada. 2/3 of the borrowers undocumented. Boy, with everything going on, you think the pricing and of risk there would have been a little bit prior to the collapse. So Fifth Third Bank Corp said as much as $200 million, and JP Morgan and Barclays are on a similar avenue. All right, the other data point we get is jobless claims, 263,000. Yeah, the highest since October of 2021. You have to chuckle a bit, right? As in CPI is at almost 3%, initial jobless claims rising to 263,000, and we're barely adding any jobs a month. 222,000, as they reference in this article. So initial jobless claims, the highest number since almost 4 years ago, folks. Yeah. The stock market, though? Stock market's just doing fine. Buybacks could increase by $600 billion over the coming year. Hit a record $1.5 trillion in 2025. Okay. The dollar value of those buybacks, that's what's expected. And yeah, it's a component. I'm going to say it's like the driving component, but you better believe it's a component of equities when you got that many buybacks. Pretty remarkable numbers. Yeah, I was reading this article last night as well. $2,000 phones. It seems like they're coming probably sooner than we realize, man. 2 terabyte storage option for the iPhone 17 Pro Max, $2,000. Right? $1,999. 2,000's coming. 2 terabyte storage option. I'm not sure you need 2 terabytes of storage, but that's the other part of that service business, right? I'm paying Apple right now monthly for my storage. The entry-level iPhone, almost $800. All right, we take a look at yields as we're coming into the opening bell. You get the 10-year right now, right near 4.03%. We jump over that dollar, trading lower. Dollar, a little bit of a bounce off the lows, 97.71 for the dollar. Gold down $22 at 36.60 right now. Silver up by 4 pennies. Jump around to some of those silver stocks. Hecla, First Majestic, gold stocks, Harmony. We'll come back, folks. We'll take a look at some other equities, take a look at gold. Don't go away.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Markets. S&P's up by 0.3%. We come right green out of the gate, and you are pushing the highs of yesterday. We gave it up a bit into the close yesterday, but you're talking about a solid 35 points above off the lows where we were yesterday afternoon, and we're coming into the spike high we got on that 830 CPI number. S&P's up by 19, NASDAQ 100 up by 112. Yeah, right up near where we were at the highs of yesterday morning as well. Dow up by 93, make it 100, and the Russell. The Russell not participating. Russell, only index currently in the red. Apple shares slightly in the green. We see how the big dogs are opening. Microsoft up by 0.4%. Amazon up by 0.3% right now. NVIDIA just hit 180 on the dot. You talk about it, man. Oracle up $1.27 at $329 right now. Some of the big winners from yesterday, AMD. Yeah, look at the give back for AMD yesterday, though. Broadcom was a big number, up by another 0.5% right now. Dell up by 0.4%. You jump over to Tesla shares, up by 0.4% right now. And you jump over to Chipotle. Yeah, this chart, man. Look at this chart struggling. Whew. It is not stopping, man. And hey, you looking for an entry? There it is, folks. 35.37. The low out there from October of 2023. But boy, you're coming down with some volume right now. On a weekly basis on Chipotle, last week was 4 trading days. So that's a big volume number. You do as much volume as we've been doing for the last month, and you do it in 4 days. And we're continuing that. And today's only Thursday. Boy, you are ripping lower on this thing. Check out the daily. What's amazing is, right, myself, yeah, so totally agree. I was just going to go on. You beat me to it, Duffy. So Duffy says in the den, getting way too costly for most folks, right? It's, they've turned into a meme online, right? Everybody records them, putting the rice in, and not to, turn into a meme myself, but I used to love ordering Chipotle, folks. Used to love it. And it is. I can order like one bowl, and by the time you get it delivered, folks, you're talking about like almost $30. You're talking about $30 to get delivered a burrito bowl with some rice and chicken and salsa and sour cream, a little cheese, right? It's delicious stuff. It is. But I totally agree. That's where, and hey, you see the reaction on the shares, and I'm sure they'll right the ship, and I'm not sure, but as you say as well, it's my favorite place. They got great food. They got a great, and but boy, you add into it where people are getting it delivered at times as well. But yeah, hey, technically right now, let's see what we got going on. You're coming into the lowest, like I mentioned, at 35.37. We have highs here from 2021. Yeah, July 2023. This equity traded from almost 10% with volume on their numbers. You got a nice acceleration from that low of 35.37. It's about $3 below where we are right now. On a monthly basis, you see the momentum. Volume lightened up a bit last month, but that was still a big volume number to the downside. Chipotle. Well, yeah, I found myself in the same way. Very against spending my money there when it's become that excessive. And the point being, right, like public sentiment, you start seeing that stuff online. I always see the stories of, the glory days of Chipotle, right? But the glory days of it when they were super growth. Yeah, you're not the only one, and it is hitting, but they're expanding as well. And that's, sometimes you underestimate how much it can do. Yesterday they announced plans to expand in Asia. Korean-based operator SPC Group, they're going to open their first stores in South Korea and Singapore next year. So you talk about opportunity. And yeah, but what I found myself wondering when I saw that, right, is I said, okay, there's some great opportunities abroad, of course. And then I said, what are they going to be charging for burrito bowls in Singapore and South Korea? Are they charging the same thing? Because I feel like that would be very expensive over there, just like it is here. All right, we take a look at the yield curve. And yeah, so we touched 4% on that number initially on the 10-year. You take a look at the curve right now. The 10-year, 4.02 is where we're sitting. You push out to the 2-year, we're at 3.52, we'll call it right now, but you have lower yields. Maybe the 1 month unmoved. And then you go out even 6 month, 1 basis point lower. What the market digesting that 2.9% number. Jobless claims 263 versus 235, as I mentioned. You know, it's pretty remarkable that we have an inflation number that's accelerating as we're coming into cuts, and the only conversation is 25 to 50 basis points. You know, everyone remember the hard line of bringing inflation back down to 2%. And I'm not even saying that this is a massive risk now on the inflation roaring back. But taking at face value, does anybody really believe we're going back to a 2% number, that's what the Fed is like hell-bent on? They have a real problem on their hands with the jobs front right now. And they've abandoned their quest to 2%. They said they weren't going to, right? Well, everybody knew that it was going to be really hard the last mile. And I think we're coming into that. We're going to be okay with that. Now, here's the kicker. That's tough on savers, folks, right? The real risk there is that's going to be tough on savers. Inflation, okay? People with annuities, the best example. But you know what it does do is it inflates away the future value of the debt. And I think that's a calculated play. And if that's one of the risks, then that's one of the benefits that comes into it. We take a look at some of the gold equities. Let's take a look at it. Harmony. Look at this, Harmony. What's going on here? A little volatility in the pre-market. You open down by 2.6% right now. AEM down by 0.6% right now. New Gold off by 0.8%. MUX off by 1%. So gold off by $25. Gold equities pairing a bit. You jump over to the XAU, down to $1.30. And the XAU, folks, talk about stratospheric. We're above the 1 to 1.618 expansion. HUI, almost the same exact move. Right above that 1 to 1.618. We started that second leg of the acceleration basically January 1st. Silver up by 3 pennies. Markets in the green, sitting right near record highs. We'll come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. You look at this weekly bar on the S&Ps, and boy, we're breaking away, man. We're pushing the highs right now. S&P's up by 14 points. NASDAQ 100, you give up those gains we had slightly right now. We're up by 41 points. Take a look at the 5-minute, little bit of selling after the opening bell. But yeah, right near all-time highs as well. And yeah, talking inflation one more time, you take a look at the journal as they're chronicling it. Likely to keep the Fed cautious on the pace of rate cuts, is as they put it. You know, this is a long-term chart, folks. This is a chart going back to 1965, okay? What's remarkable here is that look at the multitude of spikes, right? This is what the Fed's supposed to prevent. The ebbs and flows of an economy overheating and abating, and overheating and crashing. And look at the inflation numbers and how low we were basically since 93, 92, okay? And you got a number now settling at 2.9% as we're going to start cutting. So you got to realize that this stretch, almost going back to the mid-90s, we're talking about 30 years, okay? And what we've never had during that time, okay, is the core number. We've had many oil spikes that have caused the headline number in blue here, but the gray number that they gray out, that should be the bolded number in this, okay? We haven't had a spike like that since almost 92, when you were hitting, what, 4 or 5%, and they got it under control, okay? And look how long it went down. We have a 3.1% number. And I'm just reiterating it, not to harp on the massive risks, okay? Because the Fed can cut now, and then they can come back and hike. That's a very real debate, okay? And that's one of the debates being made. Hey, jobs are in trouble right now, okay? The Fed needs to cut. They're restrictive. Even the chairman said that they're restrictive. The point of this article and where the caution is that inflation is still there. So we're being careful, we're being cautious, right? Keep that in mind when you think about the long-term inflation and the eat away at buying power, okay? It's something you want to be open to, and I encourage you, because savers are the ones that will get hurt. Our debt will be the one that's helped, and, you know, you want to have some exposure to assets if that's the case, right? Your real return, the inflation-adjusted return that you're going to be looking for is going to be a big number, because we're dealing with a higher number, and I think we're going to be dealing with higher for longer. That was one of the biggest risks coming into this. We've handled this inflation bout extremely well. You got it under control, but we've gotten it under control before, and you see how it can roar back, okay? And, hey, hopefully the government makes some cuts. Hopefully we grow our way out of this. And if we're growing at a very rapid pace, we can handle inflation of 2.5% to 3%. If this economy is growing at 3 to 4%, okay, it's not growing at that number right now. With these types of job losses, the revisions, that's not what's happening. And that's the argument for the cuts. Yeah, Amazon. Look at Amazon roll over again. Be careful of Amazon in the short term here, folks. Microsoft selling right out of the gate, down by 0.3%. Apple shares, a little bit of a lift, up by 0.6%. We jump over to Google, down as well, off 0.6. Tesla shares, down, in the green by 4. Let's jump to some of the streamers. Netflix, down by 1 percentage point. Boy, you're talking about having to digest some gains from 160 to 1341. They're selling ads, and that is never changing, folks, because they are making so much money off selling ads. Take a look at the weekly. It's always a little rough when you start rising on declining numbers, right? As in, you catch a bid August 4th, this is a week of, you do 14.7, 14.1, 13.4, 11.6, 10.1 on a shortened week. Okay, look at Warner Brothers up by 2.5%. Look at that spike. What do we got going with Warner Brothers? They got a price target raise from Wells Fargo to $14 I see out there. Let's see what else they got. There's the deal. Warner Brothers CEO says there's, I'll tell you, I don't know if they have meaningful room to raise the prices on Warner Brothers. I'll tell you. So I just renewed my Max subscription, and it recurred on me. And in these subscriptions, folks, the way to do it is to cancel, try and get them to bring you back, right? An offer for the year or something like that. But it was like $180 or $190. It's like, man, that's a big number. Now, that's ad-free, and I watch a lot of HBO. I do. Watch a lot of HBO. Great programming. Some of my favorite shows out there. It's great movies as well, but some of my favorite programs on HBO. But I found myself saying, man, that is a lot of money. And if they think they have some price action on the upside, maybe they do, but they are getting a hefty price. Because, I said to myself, geez, that is a premium number. But you know what? I think they have premium programming. I do. The level of some of the dramas, some of the miniseries they do, the documentaries they do, the sports. I love watching Hard Knocks on HBO, the documentaries, real sports, stuff like that. And so I said to myself, well, it's a premium number. I guess I'll rationalize it because it's premium content. But boy, if they're coming for even more prices. Paramount Skydance, volatility calming a bit. We got some volume yesterday, and volatility up by 4 pennies right now. Is that today again? Whew, look at that again. So this thing is on quite a tear. Look at this. Micron just traded from 120 to 154 in a week. Whew. Boy, you got some selling up here at the top. Check this out on Micron. Okay, short term, be careful if you're on Micron. Doesn't mean you can't blow it away in this market, man. Look at the ebbs and flows of this equity. Yeah, you gave up all those gains. 157.54. You make it to almost within $1 of that price. We put it on a weekly right now. And boy, that was around earnings as well. You make a high in 2024, about a year and 3 months ago, 157.54, and then you just rip lower with volume. And here we are, just over a year later. Decent volume last week, decent volume this week as well. We're coming in some big numbers at that 157. One more segment, folks. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got a lot of green right now. The only thing really sticking on red, you got Google shares off 0.7% right now. Oracle giving back some of those gains from yesterday, off by 4.3. Netflix down by 1%. Palantir off by 0.5%. But check it out, right? Financials trading higher. Staples trading higher. Walmart up by 1% right now. Real estate trading higher as well on yields. Lennar up by 1.7%. KB Homes up by 1.2% right now. DR Horton up by 1.5% right now. And yeah, as I speak, folks, S&P's literally to the tick. All-time high, 65.67, up by 0.4% right now. NASDAQ 100 up a similar 0.4%. Dow catching a bid. Look at that. What do we got going on the Dow? Just everything? Yeah, usual. So yeah, I was going to say, you just look at the high price stocks. Goldman up by 1.6%. UNH up by 0.8%. Walmart, I mentioned, up by a full percentage point right now. Nvidia up by 0.4. Home Depot, another high pro stock. Home Depot up by $6, $419.64. Goldman Sachs, always help when you have a $784 equity, up $15 in the Dow. Whew. Imagine, it's wild, right? You got companies that trade at $43 in the Dow, like Verizon, with 184 billion market cap. And then you have equities that trade at almost 200 times the price at almost $800. That's only $236 billion market cap. And you have Goldman Sachs up by $15, which is more than 33% of the price value that Verizon trades at 43. So watch those high price stocks. UNH up by 4/10. Markets all-time highs, 65.68. Folks, thanks so much for kicking your trading day off right here with me at TFNN. Stay tuned. Basil Chapman, he's coming up next with the Tiger Technicians Hour. Folks, have a great day.